Top three things in my notebook this morning are the German stock market, the price of oil, and the 10-year bond yield. German stock market, I said this morning to one person, respect is earned, not allocated. This is an important concept. Of course, not everybody shares these principles, but we do. And this is something that's really on my mind this morning. The German stock market looks nothing like the S&P 500 in the last week of a correction, and that's primarily because the Germans don't have Ben Bernanke. So again, you don't have to buy U.S. stocks. You don't have to buy any stocks. But if you buy stocks, you might buy German stocks, British stocks, Japanese stocks. Again, I think that's an interesting way to look at the world because that is the reality of the world, and I suggest you consider it. Price of oil, that breaks the long-term tail line, or tail risk line, as we like to call it. 108.57 is that line. Very important line. Will it hold? We don't know. We're happy to let the market tell us. Lots of clients asking about it, but again, as I'd say, just take a deep breath, let the price confirm. If this is it for oil, you'll have plenty of time, maybe a couple of years, to be shorting it. And again, this is something that could break Bernanke's back in terms of having what was a headwind become a tailwind, and I guess that would be one of the many pending economic catalysts that are related to economic gravity. And then finally, U.S. 10-year bond yield does not believe economic gravity will occur. Post Ben Bernanke's decision, don't forget that the 10-year bond yield now looks more like growth slowing than it does growth accelerating, and that's just a sad thing to have to say. So with that, those are your top 3 cents.